Hello everyone, this is Akal from US Talks, and today I want to make an educational video on bearish divergences. So, what is a bearish divergence? A bearish divergence is when the price is making a newer high but the momentum indicators are not following, especially if they are in the overbought territory. So, for example, this is NVIDIA chart weekly, and here the price made a high here, then it fell for 4 weeks, then it made a new high here. It made a high in all these days also, but all this time the momentum was less than on this high. And at this new high also, the momentum was lower than this. This is a very high momentum RSI of 91.17. So after that, we see that the prices fell off and they went sideways for a real long time. This was in 2024. Now nearby we see that between these two red lines again price made a high on 4th of August 2025, 4th of August 2025, and then it came down a little bit and made another high on 27th of October 2025. But the RSI did not make a new high. RSI is almost at the same level or slightly below it, and so is the PPO indicator. So the momentum is not making new highs, whereas the price is making new highs, which is not a very good situation. And we see what happened is that Nvidia went sideways. Let's see what Google did. Google here made a local high. After that went down for 2 weeks. Then made a new high. Went up for 5 weeks, 6 weeks. Made a new high, but its RSI indicator did not make new highs, and it was in extreme overbought territory. And so did the PPO also did not make new highs. PPO also came down, and we see that after that Google in the past 5 weeks fell down by 11.8%. Let's see a similar example in Meta. Between these two red lines, we have two highs on 10th February 25 and 11th August 25 in these weeks. But the RSI indicator has not made a high. RSI indicator is lower, but prices are higher. Here again, PPO indicator is lower, but prices are higher. So this is another case of divergence. And we see that after this, prices catered off, they fell down. Every divergence does not mean prices will fall very badly. It just means that the momentum has lost, and you would do well to get out of it and not keep your positions in long side there, because what will follow is you can't really say what will follow. All you can say is that it's not ceasing to go up. Let's see what Broadcom did. Broadcom made two divergences. One in first two red lines, price made a new high, RSI did not. Then price made another new high, RSI is almost at the same value, is almost exactly at the same value or maybe slightly low. That qualifies. It should be just slightly low. That's quite okay. So, and what happened after this large bull bar is that Broadcom came down sideways and sideways to downwards. Now let's see another one on the Bitcoin space. This showed first divergence it showed was a big one, and it showed it between 4th March 24 to 9th December 24. This is a weekly chart. All the charts have been weeklies, which we have discussed just now. So the price made a much higher high, RSI did not. That means the momentum is not following the price, and it's in overbought region, quite an overbought region. Then it made other high from here, but RSI went downwards. In the first instance, also PPO went downwards. Second instance, PPO went still more downwards. Third instance, price made another high, but the RSI was even below 70 levels. And what happened next is that Bitcoin crashed. So we got three warning signals. You could have ridden the first two and still got substantial gains in Bitcoin. That's fine. But if you're getting the third signal, then you should have, or anybody should have exited Bitcoin there if you understand divergences. And Bitcoin has fallen by about 45% ever since 29 September 25. So this was just a brief roundup on divergences, bearish divergences. Someday I'll make a video on bullish divergences also when the market starts to look to go up. Okay, thank you so much.